Thank you for staying tuned. Investigations by the Securities and Exchange Commission (SEC) into Oando PLC reveals underhand dealings which are in breach of Investments and Securities Act 2007. According to the inquiry carried out by the independent auditors Ernst & Young, the acquisition of Oando's Exploration and Production Limited by Oando PLC in 2013 without the prior approval by the regulatory authority is in serious breach of the Investments and Securities Act 2007. The report also revealed that misstatements in the 2013 and 2014 audited financial statements of Oando PLC and the misleading information contained in its 2014 right issue circular were all in breach of the ISA Act apart from related party transactions. This comes as investigations of alleged financial impropriety are leveled against the suspended Director General of SEC, Muniru Gwarzo, and two others. In other news, United Nations Industrial Development Center and Investment Technology Promotion Office in Nigeria has initiated another workshop aimed at addressing financial literacy of women entrepreneurs. According to the representative of UNIDO, the agency is working with government to promote investments in the non-oil sector. Participants at this training are drawn from the Nigerian Association of Chambers, Commerce, Industry, Mines and Agriculture and Lagos Chamber of Commerce and Industry. The ultimate aim is to help entrepreneurs create bankable projects and get access to intervention funds provided by development banks across the country.
This is a result of ITPO Nigeria cooperation with LCCI and NASIMA Women's Group, and this is focused on women. So it is expected that these women who are now in the class, they will help others to prepare the bankable proposal. And the training is focusing especially on the specialized software which you need to develop, online software, Comfort Lite, for appraisal of MSMEs. But our final goal will be that at NASIMA Women's Group and at LCCI Women Group, we will establish a group of women experts who will take other women to develop their bankable project proposal.
We are trying to train our women to be able to avail themselves of the intervention fund. There are many intervention funds in Central Bank, in Bank of Industry, in Bank of Agriculture, and you see women are not able to avail themselves of these funds because they are not able to come up with bankable projects. But after this training, they will be able to, with confidence, to go to the bank with project document that will be acceptable.
Indeed, the Nigerian economy continues to face serious macroeconomic challenges, and this is attributed to a series of shocks, including the decline in oil prices, foreign exchange shortages, disruption in fuel supply and sharp reduction in oil production, power shortages and insecurity in some parts of the country, as well as low capital budget execution rates. Managers of the economy responded to the recession with a package of monetary, fiscal and exchange rate policies. Private investments are also a key policy priority aimed at driving economic diversification through entrepreneurship and industrialization in the lead sectors of agribusiness, manufacturing and mining. In 2016, Nigerian economy slipped into recession for the first time in more than 2 decades, reflecting adverse economic shocks, inconsistent economic policies, and deepening security problems in the Northeast and Niger Delta regions. The outlook for 2017 is for a moderate economic recovery, with real GDP projected to grow at 2.2%, spurred by increased infrastructure spending and restoration of oil production to previous levels. Well, joining me now live in the studio is to discuss this as a partner with PricewaterhouseCoopers, Moshood Olajide. Moshood, thank you very much for spending out your time joining us on the show.
Thanks for having me, Tolu.
Well, let's start this way. In all of these beautiful figures we see, it's been like Nigeria out of recession, a little bit of positives, and even the last GDP figures reeled out by the Nigerian National Bureau of Statistics shows that we're looking up. I don't know what you think of this.
I mean, in all of this, we should look at the bright side, Tolu. We were in recession in 2016. We're out of recession. A number of things has happened since then. You're aware of the ARGP, the Economic Recovery and Growth Plan of the federal government, and that has that laid out the policy direction of the federal government. The implementation hasn't been as fast as we would have hoped for, but there are some key wins that we can refer to leading from that plan by the federal government. So I think the future is bright.
Bringing it down now to this issue of this economic diversification, which is what everyone says everywhere now. Yesterday, I was at the launch of the Made in Nigeria campaign, as in there was a relaunch and in Lagos here, and everyone there was talking about diversification, diversification, diversification. Now, what do you are we really moving towards that angle with the moves by this present administration?
I think we are. I think it's not as fast as we would have wanted it to be, but I think we are. I think it's a gradual process. I think if you go into most of these supermarkets and even online, you see a lot of made in Nigeria products. Now people are buying them. From what I could see in the last quarter, a lot of people looked to Nigerian-made products for cereals for their kids. People are looking to Nigerian-made products for baby products like diapers and things like that. So, I mean, we're beginning to see that move towards Nigeria, made in Nigeria products. The quality is not yet where we want it to be.
Exactly.
But, I mean, Rome wasn't built in a day, Tolu. These things take some time. I mean, the whole idea of the foreign exchange going the way it went forced Nigerians to look for cheaper alternatives, and that in itself then moved us towards made in Nigeria products, and I think we're moving towards the right direction. Although I must quickly add that our GDP growth in the last quarter might have been better if the manufacturing sector had grown the way we wanted it to grow. So, I mean, a lot of these things happen because of a combination of several things that you just need to take gradually. But I think we're moving towards the right direction.
Looking at that manufacturing, which you just talked about, and some other sectors not doing very well, and the central bank comes out to say there's an I&E window, that's the import and export window. They're doing, I think, above $18 billion now as it stands. Why are manufacturers still challenged? Many of them are still coming out to say we still can't access Forex, and banks are doling out Forex to people. Well,
I mean, so the truth is that they still can't access Forex the way they would like to access it. The truth is that a number of them are looking into still reeling from the shocks of the recession to their financial statement. So, I mean, you know, sometimes some things happen and you don't see the impact immediately. Some of them are still coming out of that shock. I mean, let's be very honest. Our GDP is still driven mainly by oil. Whether we like it or not, even our revenue is still driven mainly by oil. So if there's a problem with oil, it takes some time for us to get out of it.
Now, before now, we've had this it's not been too how do I put it, rosy, if that word is accepted. That's talking about policies coming from the fiscal and the monetary side. It's been two different things. The fiscal side comes to say this, the monetary side comes to say this, and it's been actually causing problems when it even comes to regards to investors' confidence. But I think many now agree that there seems to be a little bit of synergy coming from both sides, and investors' confidence seems to be returning. I don't know if
I think so, Tolu. I think that we seem to be getting it right, or we seem to be moving towards getting it right. I mean, one of the objective indices that you could rely on is probably the ease of doing business report. We've moved by 24 points. I mean, from my perspective, the movement from 169 to 145 is largely driven by those cosmetic changes that we had to quickly make. Those changes that you could quickly make, and you will see some improvement in our ranking. I think now it's time for us now to roll up our sleeves and then get deeper into those reforms that the government has promised. And I mean, with the work that is being done by that presidential initiative looking at ease of doing business, if they can't keep up that work and probably even ramp up performance, we might really get faster at making doing business in Nigeria easy. Because again, one of the reasons why the manufacturers find it difficult to turn profit or to do all these things that we expect them to do is also somehow linked to ease of doing business, how they're able to be nimble and flexible in terms of getting government approvals and all of those things.
One of the major challenges with regards to this ease of doing business thing that many still identify is infrastructure. And yes, this budget shows that a lot is, actually put aside to address the infrastructure challenge which we face. But like many have said, it's been like this for a long time. So like Rome is not built in a day. But what about private investment? Public-private partnership. This is what we've been talking about. At the start of this administration, there were a lot of meetings, China, Japan, currency swap, and all of that. We will seem not to be saying that. We expected a rail project to be done by the Chinese, and I think we need to do more public-private partnership, particularly with regards to infrastructure.
And that's absolutely correct. So if you take the investment that is required in the power sector, for example, as just an example, it's almost the size of our budget, right? So if you take the investment that is required in the transport sector, let's just take rail. I mean, if you wanted to upgrade our rail infrastructure all across Nigeria, it would almost cost the size of the capex in our budget. So we can't do it alone, right? So we need private investors, and some of the, you need to drive private investors to the right sectors of your economy, and you need to provide the appropriate incentives to have them do it. Now, one of the major concerns that people have when they're coming into Nigeria's policy flip-flop, right? It's a very, very big problem. Tolu, you find it very hard to give an example of a PPP project that has worked in Nigeria, that if a government has not changed its mind sometimes along the line. I mean, whichever one you cite, people will tell you all the hurdles that had to be crossed just to get those projects along the way, and what then happened just immediately after maybe the contract documents were signed and things like that. So the government needs to get that right. The government needs to be able to attract the right investments by making sure that people can rely on their word. When they say, oh, we're going to fix this road and we're going to toll it, for example, that they would see it through. I mean, I also understand that there are a lot of political ramifications to some of these things, but that policy flip-flop, the idea that an investor cannot be confident that if a government signs an agreement with me, the next government is going to honor it, is really a very, very big source of concern.
Sanctity of contracts.
Yes.
We need that kind of continuity so that we don't just start a project and along the line it's just. Now I know PwC is known for projections, giving figures, and what's the outlook like? What do we expect outlook as we project, as we move ahead?
I mean, as a firm in Nigeria, we believe strongly in the growth of the Nigerian economy. We are investing heavily in our people, and that demonstrates our belief that the Nigerian economy is positioned for growth. We do think that there's still a lot that needs to be done by the government, but we think the fundamentals relating to the Nigerian rising story still exist, and we believe very strongly in it.
Indeed. Before agriculture is one sector of this economy that we cannot ignore, particularly at this time when we try to shift away from crude. With all the vast land, the population we have, the northern part of this country is really investing. States like Kebbi, lots of them, we can go on and on, Lake Rice and all. But do you still see the figures are not really showing that the agricultural sector is doing well? Just like we talked about the manufacturing, to the PMI, which we see, it shows that the manufacturing sector too. So agriculture is also where we could get lots and lots of funds, or even foreign exchange. Why are we not taking advantage of this?
We actually looked at this about 2 or 3 months ago, and what we kind of saw was it looked like the agri sector was coming up, and then it stayed at some level, and we think that it's probably because of the resurgence that is coming back up in the northeastern region. We still think that the fundamentals of an economic growth through leveraging on agriculture still exist. We have a population of 180 million, depending on who you talk to, but somewhere between 180 and 200 million. That's a large population to consume whatever it is that you produce. And we still import a lot of agricultural products that we can readily grow in Nigeria. We still have significant upside in terms of processing of those agricultural products. So we still think that there's a lot of growth opportunities in the agricultural sector. Now, the other point I need to make is that agricultural policies you don't start an agri policy and in the next 1 year you see boom, right? It takes time also. It does take time. Some of these plants don't even I mean, they take longer than a year for you to get what you need to get from them. So I think we're in a hurry to see the growth in the agri sector, but I think that we're in the right direction.
Many say maybe we started late. Well, as we round up this segment of the show, I still want a word with regards to Forex. Forex, there's been a little bit of stability. We talked about this when we're on 500 naira above and all of that, but now we're doing 360. The disparity seems to be a little bit on the low side. I don't know if you think we could still do better.
Well, I mean, we could always do better in terms of liberalizing that space a little bit more. But, I mean, you can also understand that the government is dealing with a lot of pressure, right? It's dealing with not getting the inflation rise out of hand and making sure that the Forex policy aligns with the growth objectives of the government. So it's a difficult and delicate balance. We seem to think that as we go forward, this difference would normalize gradually. It doesn't seem like we would see the kind of shock that we saw about 6 months ago, unless something drastic happens again.
Well, I can see the optimism. I think we could just leave it there now. Moshood Olaji is a partner with PricewaterhouseCoopers, giving insights into issues surrounding Nigerian economy with regards all the sectors. We actually try to touch it, and also outlook, prospects for the coming year. I must thank you for sharing your thoughts with us.
Thanks for having me, Tolu. Thanks a lot.
Well, we'll take a break, and when we return, we'll link up straight to the Nigerian stock market, where we'll be bringing you up to speed with trading proceedings for the day. Stay with us. It's your show, Business Nigeria. We'll be right back. Glad to have you back. Now we move straight to the stock market, where TVC News reporter Yusuf Akogu joins me now live from the exchange. Hello, Yusuf. The market has been positive. Tell us what happened today after trading.
Thank you, Tolu, and welcome to the trading floor of the Nigeria Stock Exchange. The Nigerian market closed in the positive territory today, with the all share index closed up by 1.37%. I have with me in our studio here at the exchange to take us through how the day's proceeding went, the CEO of Enterprise Stockbrokers, Rotimi Fakayejo. Mr. Fakayejo, welcome to TVC News.
Good afternoon.
We saw the market close in the positive territory today, with consumable goods doing so greatly. What happened?
Well, I think this is a time that we expect a thing like this to happen. The high cap stocks, mainly Dangote Cement, Nigerian Breweries. Today we don't have on that same stable Nestle Nigeria PLC. But these two securities are very important to the market. And we've seen a situation whereby Dangote Cement is going to hit its all-time high in this year 2017 before it ends. And at the same time, Nigerian Breweries, which had been at about 180 at the time this year, is also going to hit another all-time high. So we still expect the kind of traction we are seeing right now in the market to continue. And hopefully, I think other securities will definitely join the trade. So most likely, we may see the index closing at above 40,000 basis points as at the close of the year, and we are even more enthusiastic that it could be better than that.
The one is surprised at this time of the year when Christmas is approaching. People are involved in so many activities and all of that. You should expect them to take profit, but we are seeing so much flow of investment in the market.
I think most importantly, the retail investors have actually lost their position in this market. So what we have mostly now is foreign portfolio investors, and at the same time as well, institutional investors and net worth investors. So there is very little impact that the retail investors can have. I think what we need, the market needs them for, is for cohesion, to actually stabilize the market, and that is what we are seeing mostly. So for me, I see the institutional investors taking up more securities at this time, so at least for what they have had, they could report a very fantastic position at the end of the year. the All-Share Index is already doing a year-to-date of about 43% right now, and we expect that the market we should be able to do better than this, maybe up to about 50% year-to-date as at December 29th, when we have the last trading day. So we expect that this is just the beginning. Nigerian Breweries still has a long way to go. Dangote Cement will still move. Nestle will still move. The differential between or the disparity between Zenith Bank and GT Bank is so wide, even as they have most parameters working in their favor. So I expect that Zenith Bank also will still gain momentum, and at the end of the day, we see the market closing much better than what we are seeing right now. But
you talk about foreign investors, the flow of foreign investment into the market. Are we not leaving the market vulnerable in the event that the foreign investor decided to withdraw their investment?
Well, I think that vulnerability has always been there. It was only in year 2007, 2008, just before then, that we have the local investors doing much better than the foreign investors. Then when we had a downturn in the market, the local investors were just there to stabilize. But the major mover of the market has always been the foreign portfolio investors. For me, I believe that with the stability we are having in the foreign exchange and the availability to those that may want to take their money out, that is already giving them succor and peace of mind to be able. So for 2018, I don't see anything that is going to threaten investment. So we may not see that such capital flight. But maybe as we approach year 2019, maybe at about this time, year 2019, we may not see the kind of positive momentum that we're experiencing right now in the market. I think it may just sway the other direction.
But finally, before we go, any impact of stability in the oil market on the market?
At the fuel supply?
The stability in the oil market, the energy market?
Yeah, I think that also is very impactful. And I believe that maybe with things getting better, we're going to see much more impact on the equity market.
Thank you very much, Mr. Rotimi Fakayejo. That is the most we can take. Now, it's back to you in the studio for the rest of the program.
All right, thank you there, Yusuf Akogo. Good to know the market closed positive, 1.37% all-share index. Thank you for bringing us up to speed. Well, before we round up now, the Nigerian National Petroleum Corporation, NNPC, says there is no plan to increase prices at the ex-depot level and pump price ahead of the forthcoming Yuletide. NNPC's Group General Manager Public Affairs Division, Undu Gumadu, confirmed this as there has been a rift between the independent marketers and depot and petroleum marketers over discrepancies in ex-depot prices. Gumadu says ex-depot petrol price of 133.38 naira per litre and pump price of 143 to 145 per litre had not changed. He assured the public of enough stock to ensure seamless supply and distribution across the country. Meanwhile, queues are reported in some states across the country. Well, that's a wrap on the show. Thank you very much for watching. On behalf of the entire production crew, I must thank you again. Join us tomorrow, God willing, for a fresh edition. I am Tolu Lope.